And welcome back. I'm joined now by David Morgan. He's the publisher of the Morgan Report and a self-described precious metals aficionado. David Morgan, thank you very much for joining me today. Welcome to the Power and Market Report. How are you?
Albert, I'm great, and thanks for having me on.
It's my pleasure, my pleasure. You are the silver guru, and I saw a great interview actually you did over at USA Watchdog talking about the silver shortage. So why don't we start there? Silver has been in short supply for a while. Is this still the case? Are we still, I forget what it was, millions of ounces short? Is that still the case?
Well, right now the retail market is still very, very tight, and there are delays anywhere from, depending who you speak with, 4 weeks, 6 weeks, 8 weeks, in some cases 12 weeks out, depending on the product. So certainly on the retail side, the word shortage definitely applies. The bigger scope, of course, Albert, as we discussed pre-interview on the phone a few days ago, is does that mean that there is a quote-unquote silver shortage? And this is where it gets a little more difficult to analyze, although certainly we can address that later. But for right now, the silver market is basically on fire at the retail level, and almost all products are being sought. In other words, 100-ounce bars, 10-ounce bars, 1-ounce wafers, generic rounds. And of course, the mints, the government mints, are way behind. The U.S. Mint is allocating the amount of silver that they'll give out to their dealers, and the Canadian Mint is basically closed down for a while. The only one that's really producing at this time that's trying to meet the demand is the Australian Mint, the Perth Mint. And I just read in Reuters today, just before the interview, that they're setting, they're setting a record volume. Well, of course they are, because the demand is so high. So it seems as if the most recent information I have is that the orders now that are coming in, the smaller scale retail investors kind of backing off. In other words, a lot of people have come into market and waiting now for their silver delivery. But larger orders are coming in now. So, where this ends up, nobody knows for sure. Certainly we can talk about it further if you wish.
Okay, now it's not a surprise, I guess, that government mints would be behind the curve. This seems to happen every couple of years, but this is also private mints. Like you said, the demand is, or the shortages go all around, right? So it's sovereign coins, it's rounds, it's ounce bars, 10-ounce bars. Where's the demand coming from at the retail level, or why is there so much demand for silver right now?
Well, I think why is a better question, and it's because the price is so low. I mean, we did a study for our website members of the Morgan Report, and if you do it on a true money supply basis, the amount of funny money out there relative per ounce of silver is basically at the same ratio it was back when silver was at around the $5 level in the early 2000s. And let me go a bit further. If you take that level, the $5, under 5 actually, in the early 2000s, and you inflation adjust it, that was the lowest price silver on an inflation adjusted basis ever in recorded history. That was lower in real terms than 22-cent silver was in the Great Depression. So now what I'm saying is that on a amount of money printed basis, the $16 level approximately is the same as $5. Now that doesn't mean that it's costing 5. I understand that, but what it means is if you adjust it to the amount of printing that's gone on from the early 2000s to today, you're basically paying the same ratio. So it's very undervalued. It's undervalued relative to primary silver miners. It's undervalued relative to gold. It's undervalued relative to the Dow Jones. I mean, just about any metric you want to look at, silver is a screaming buy. So there's an amount of silver bulls out there that understand, not maybe what I just explained, not every detail, but they know very well that silver is very undervalued. So they're coming in, and these are new buyers. These are buyers that buy, on a methodical basis, every month or every quarter or whatever. And of course, there are people that are considered silver stackers that buy almost regardless of the price, on and on. And you have a lot of people that are savvy to the big switch, meaning we're moving from the equity sector back into the commodity sector uh, approximately now. Now is a great time to be shifting out of equities and into commodities, especially the metals.
Certainly, if you look at the relative value, that makes a lot of sense. Put up a chart here of the silver price coming down from $50. It's either a price of a chart of a very good opportunity or a picture of silver investors wanting to jump off a mountain. It's just been terrible. But you're right. If you look at the relative value, you assume that it was fairly priced at some point in there. It's gone straight down. And then in the meantime, for 3 years or so, the stock market's gone straight up. And I would agree. It makes sense that there would be, at some point, it makes sense to switch over. We'll get to stocks a little bit later, but I want to talk about now going away from the retail market, just portfolio silver. Is there a shortage there? And if there isn't, is there an arbitrage opportunity? You would think that people at some point would be melting bars and pressing rounds to take advantage of this price differential.
Well, there is an arbitrage opportunity. This took place in 2008 as well. In fact, I did it myself. I bought 3 1,000-ounce bars off the exchange and had them shipped to a friend of mine that owns a mint, and he minted those into 1/2-ounce rounds, and you could make a pretty good spread. That opportunity still exists today. The problem is that the demand is so high on the retail side, you would have to still wait. In other words, you could call up a mint master somewhere, make a deal with him to press him out at, let's say, 50 cents a coin or 60 or 70 cents per coin or per round or medallion, depending on what we're speaking of, because you can't really call it a coin unless it's a government issue. But regardless, you would have to basically be a bit patient. So you would buy, let's just go small. Let's say you bought one contract, 5 1,000-ounce bars, and let's say the total is like 4,889.25 ounces. So he would have to take that and process it and press them out and send them to you. In that time, you may see the premium come down. So there's still a risk involved unless you can shorten that arbitrage time. Albert, you're taking a bit of a risk. Of course, you could lay that risk off in the futures market if you wish to. So can it be done? Absolutely. Is it being done? Not much. The last time in 2008, I was asked to consult for a silver processor that did nothing but industrial type of silver products, which would be like plate, wire, shot, all kinds of silver products that's used industrial side only. And I told them what was going on with this arbitrage opportunity, and they basically didn't close down, but they lightened up significantly what their industrial usage demand was and went to pouring 100-ounce bars for the retail market. And they took full opportunity on that arbitrage that was available. So does it happen? Yes. Will it happen this time? It probably is in some small cases. Again, the problem being is that when you're pounding out as much as you can, you got to get in line, and that means there's a delay and no one knows the future, so you've got to take a bit of a risk.
Okay, so that sort of makes sense. I think this is sort of what happened last time too. It's not like there wasn't silver in the pipeline. It's just that it takes a while for that to work its way through the system and come out the other end as a retail product. Is that what you're saying?
It's exactly right. I mean, there's some people that get a little upset, but those are the facts. I mean, for example, I gave the example of 12-week delivery. Well, if you go to the Sunshine Mint, which is like one state over from where I'm sitting right now, and you order their rounds, the Sunshine rounds, you're going to have to wait about 12 weeks. Well, why is that? Because they put out the planchettes or the blanks for the U.S. Treasury to make silver eagles. In other words, government minted coins. So they are doing everything that they can at full capacity to put those out. So the silver that you would want for their own product is on the back burner, so to speak. So you're going to have to wait even longer for that product. So you can see this thing starting to back up. And my concern, Albert, is that how far does it back up? Right now, round numbers are probably waiting for about 5 million ounces to flow through the system on the physical side. If you look at 5 million ounces versus 7 to 750 million ounces that are mined on an annual basis, that's a pretty small percentage. But we both know that markets move at the margins. So if 700 million of those ounces are tightly held and not going anywhere, and the float is very, very tight, then if we go from 5 million ounces to 10 million ounces, that might put some real strain even into the commercial bar market. And that's what I'm keeping my eye on almost daily. I've spent a couple hours this morning talking to different wholesalers on what the demand was and how they're meeting it and that type of thing. And I don't want to drive down to this thing too far. I mean, it probably will, take care of itself over time. But if it continues and if there's more and more pressure, you could see even further delays.
David Morgan joining me here. I want to talk a little bit about the Federal Reserve and interest rates. It's a related topic. I certainly can't talk about silver or gold, or even the stock market for that matter, without getting into central banking policy. They just shied away from a rate hike, and we're going on almost 7 years of this 25 basis points or less. How long do you think this can go? Do you think we're going to have a rate hike this year, early next year? And what do you think will happen if that is indeed the case?